In the last 24 hours, we got some shocking news on the Clarity Act. We also heard the Supreme Court blocks Trump's emergency powers to issue tariffs. We also got leaked GDP information, and it is absolutely terrible news for the United States. We got to go through all of this information because half of you that watch this channel are United States citizens, and this is going to impact everybody else in other countries that do business with the United States. Here we go.
Alert for you. It's finally here. The Supreme Court has made a decision on President Trump's tariffs. This is a huge case, a big ruling. It comes right before the State of the Union. And Shannon Bream, of course, is standing by with us. Shannon, do we have an initial thought on what the ruling is?
We do. We've got a very fractured opinion, but initially what it says, we know it's authored, the primary opinion, by the Chief Justice, and says essentially that this IEPA, this law that grants the president emergency powers, did not, it looks like by this first blush reading by the Chief Justice here, does not give him the power to levy these tariffs that he's levied. The part of this initial opinion says the words regulate and importation. The president says that gives him the independent power to impose tariffs on imports from any country, any product, any rate, any time. These words, it says, cannot bear such weight. We know we've got a dissent by Justice Kavanaugh, by Thomas and Alito, it looks like. And those were the three we thought during the arguments, if anyone would be persuaded to allow the president to move forward with these tariffs, they would be the ones to do it. So at first blush, like I said, there are multiple parts and concurrences to this opinion, but it looks like what the primary holding is going to be is that these tariffs cannot be used in the way that the president had tried to use them.
Cannot be used. And then here's President Trump right after this was announced.
Therefore, effective immediately, all national security tariffs under Section 232 and existing Section 301 tariffs, they're existing, they're there, remain in place, fully in place, and in full force and effect. Today, I will sign an order to impose a 10% global tariff under Section 122 over and above our normal tariffs already being charged.
And here's more.
But other alternatives will now be used to replace the ones that the court incorrectly rejected. We have alternatives, great alternatives. Could be more money. We'll take in more money and we'll be a lot stronger for it. We're taking in hundreds of billions of dollars. We'll continue to do so.
95% of tariffs are paid for by U.S. companies and Americans. Unfortunately, we are not seeing the money coming from other countries. It is us who are paying the bill. So they still haven't properly explained this to him. The tariffs are supposed to bring manufacturing back. America lost 108,000 factory jobs instead. The tariffs are supposed to replace income tax. Americans' income taxes are higher than ever. The tariffs are supposed to make other countries pay. American citizens pay not every cent, but close to it. Now the Supreme Court says they were illegal the whole time and not a single dollar is coming back to us. It's all going back to the companies. If this all gets worked out, this could take years. President Trump's announced that he has a backup plan for tariffs. And then here it is. It's official. One of the most anticipated rulings in decades. The Supreme Court has ruled that President Trump's emergency tariffs are in fact illegal. U.S. faces $175 billion in potential tariff refunds. So that is how much money they took in. $175 billion, not hundreds and hundreds of billions, $175 billion. All right. And then check this out. His response, new global, 10% tariffs, called SCOTUS a disgrace. So that's disturbing. Said, I don't need Congress. Attack the Fed chair. That's the statement. Action. Markets watching executive branch defy judiciary branch. In real time, volatility is coming to market. So you got to know this. We also got some alarming GDP data. Did President Trump just leak U.S. GDP data? President Trump posted the U.S. GDP data about 40 minutes before the release this morning at 7:50 a.m. Eastern time. Trump posted that the Democratic shutdown cost the USA 2 points in GDP. So they originally came out and said the GDP for last quarter, for quarter 4, 2025 was 4.4%. It was reduced to 1.4%, a 300 basis point decline. I don't know what to say. I asked if this is true because it's kind of shocking to see that much of a change. And yes, the revised numbers are true. 1.4% growth instead of the 4.4 that they said that we had. Now, this is why the Fed hasn't dropped rates anymore. Jerome Powell kept being attacked. This is some of the data maybe that they had that they couldn't release yet. that we didn't know, right? Everyone was saying GDP is good, inflation is going down, drop rates. The reason they haven't was specifically this. The Fed is now in the worst possible position. The US GDP just fell to 1.4% while inflation is still rising. US GDP was expected to come in at 3%, but came in at just 1.4%. That is a major downside surprise that shows that economic growth has slowed much more than markets were expecting. One key reason behind the slowdown was the government shutdown in Q4 for nearly 1.5 months. That directly impacted output spending and overall activity, which lowered the GDP. But that is only one side of the story. At the same time, inflation data showed an increase. PCE inflation came in at 2.9, the highest level since March 2024, and core PCE rose to 3%, the highest since April 2024. This is important because PCE is the Federal Reserve's preferred measure of inflation. Even though CPI and core CPI have been trending down recently, the PCE numbers show that the cost of goods and services is still rising inside the economy. So prices for things are still going up, not down. They're going the wrong way. So now we have a difficult situation. On one side, growth is slowing, GDP is much weaker than expected, and economic activity is loosening momentum, and job losses are increasing. Inflation is rising. Job losses are increasing. The two things the Fed is supposed to fight. On one side, inflation in goods and services is not fully under control. Prices are still rising at the pace that the Fed that is above the Fed's target. This creates pressure on consumers. If growth slows while prices continue to rise, households face more difficult managing expenses. Income growth does not keep up with the cost of living and financial stress that it increases. Now the Federal Reserve faces a clear dilemma. If the Fed cuts rates quickly and injects liquidity into the system, it could help support GDP growth and improve the job market. Lowering rates makes borrowing cheaper and can boost spending and investment. However, if inflation is still elevated, cutting rates too early could push prices higher again, which would make inflation much worse. If the Fed keeps rates high and stays on pause, inflationary may cool further, but slower growth could turn into deeper weakness. GDP could weaken more, and the labor market could deteriorate further. So right now, the Fed is stuck between two risks: cut rates and risk higher inflation, or hold rates and risk deeper economic slowdown. And that combination makes the next policy decisions much more complicated than ever before.